So we have elections. They're coming up in February. Governorship elections are in early March. But they're probably less significant than what is happening both in the oil market, the currency market, and in interest rates. And what we see is that the first half, regardless of the electoral outcome, is likely to be like the fourth quarter of last year. So we're going to see quite high rates, market interest rates, T-bill rates high, around the 17% mark, as the Central Bank of Nigeria treads carefully through this period. Later on in the year, there's a chance, if oil prices are trending quite high, if there has been a peaceful election, and if inflation is trending down again, that there could be, in the second half this year, a large cut in rates. And by that we mean a sort of cut in T-bill rates from around the 17% mark, even as far as down as sort of 14 or even 13% in the fourth quarter of this year. So that's why we say a year of two halves.
Okay, so but have you done any scenarios and based on risk that are associated with the elections?
We have some internal risk analysis of how that could play out for our clients, so we have that, but broadly we're politically neutral. I think the point we make in the report, Year Ahead 2019, is that the institutions are very solid in this country. The Central Bank of Nigeria has pursued a consistent FX policy for a long time. The interest rates have been very carefully set, at least the market interest rates have been very carefully set to attract foreign portfolio inflows into the country to support the T-bill market and to support the reserve situation of the central bank. So the emphasis in the report is on consistency and how that will play out in the first and the second halves of this year.
Still moving back on monetary policy, we just had the announcement of by the Monetary Committee just a couple of days ago, and then we saw, they maintained rates and kept all the parameters stable. And we know later down the road we're going to see the central bank governor's tenure is going to come to an end. How are you guys interpreting this move, and what do you think playing out?
Well, that's quite right. I mean, on the actual monetary policy rate, the MPR, it hasn't been changed for a long time. However, the CBN is very capable of, and does, change market interest rates on a regular basis. So the two inflection points in 2018, if we just look back for a second, in 2018 we saw those rates come down from around the 17% mark at the beginning of the year. Then from April through to July, they held it around 13% or so, and then straight back up in August, September to 15%, and then later up to sort of 17%, which is roughly where they are now. So the CBN changes its market rates all the time, and it does so in relation to two things. First, the domestic outlook, which is inflation, and secondly, they do it in response to the normalization of US rates and the need to keep foreign capital coming into this country.
But what's your outlook for the currency?
Stable. Two reasons for that. First, the CBN has a long-term policy of defending the rate. They always want to do that. Secondly, the reserve position is very good. Foreign exchange reserves of the CBN are roughly $43 billion. They were $38 billion a year ago. So they have plenty of firepower with which to defend the currency. And in addition to that, the foreign investors who might have taken money out ahead of elections in February don't seem to have taken as much money out as our worst case scenario. So our worst case scenario is that they could have been taking out up to $2.5–3 billion a month. They're probably not doing that. In fact, December data shows there's some inflows. So it's quite good news there.
But what are you guys projecting for inflation in the second half of the year?
That's a very good question, and it's a tough question. Inflation has remained stubborn. The Monetary Policy Council of the CBN was very prescient about that early on in the year. Minutes from the May meeting said, we're worried about this. Inflation has appeared to come under control, but we think it's going to remain stubborn for the rest of the year. It has done. They said that again in July, in September. And we think there's a chance of a spike up in inflation around the election time because of electoral spending. That probably comes as no surprise. But later on in the year, there's a good chance it trends down through sort of the 11% mark towards the 10% mark, which will add to the case for the rate cut. Because don't forget, at the end of the day, the CBN would like to see a cut in market interest rates to stimulate the economy.
All right, I see your economic projection is about 2.2% growth for the year. What is underpinning that?
So that's another great question. It's kind of difficult, GDP. It's a complicated animal. The Nigerian economy is very complicated. But we think that agriculture, which is about 25% of GDP, has a potential to go back to its trend growth, which over the last 2-3 years has been about 3% year on year. So you've got that sort of backbeat. And then there's potential for trade and manufacturing to recover as well, although their recovery in 2018 was very inconsistent. And of course, you've got telecoms, which has been growing at around the 10-11% mark in real terms in recent quarters, which is great. That's a real step change for the Nigerian economy. What's really great about the type of growth that we're getting is that non-oil growth is now coming through as the driver of growth. And that increasingly happened throughout 2018 and is establishing a trend.
All right, but real quick, I'd like to get what your outlook for oil is and also the budget.
Sure. So on oil, we're not specialist oil price forecasters, but we have to bring it into the equation. Because obviously oil provides foreign investors with a degree of confidence that the current account of the country is going to balance, or at least is going to be strong enough to support investment. And so we think that oil will trend around the $58 per barrel level on average in 2019. The reason we think that is twofold. First is that the futures curve in oil has settled down around $60 a barrel, at least for the first 6 months of this year, so it's possible for Nigeria to sell oil forward around that level. The second one is that Saudi cuts and OPEC cuts seem to have some credibility behind them, and we think that could support prices later in the year.
All right, then we'll keep our eyes and see how things play out. Thank you so much for your time. We'll see if